Good morning. How are the two of you this morning? We have not seen each other in weeks, and I believe the last time we saw each other was in person.
In person.
Yes, it was in person.
3 weeks ago,
Yeah.
but it seems like it was about 3 months ago.
Exactly.
Yeah.
Yes.
We can't survive without Jacqueline in our lives. So
Yes.
we're like,
This is much needed.
something doesn't feel right. Oh, it's Jacqueline.
Hey, you guys were pretty proud that you made my social media story.
Yes.
Yep, you made that this month. So that's exciting.
Yep. Yeah. And we had a great dinner.
Yes.
We did.
It was great to meet you in person for the first time. We really enjoyed it. Can't wait to see you again.
Yeah.
Yeah, agreed. Well, you said
Other than a
August.
computer.
August. Yeah.
August. We'll be up there in
They'll
August.
be in Minnesota.
Yeah,
Yes.
Minnesota.
Minnesota. Well, how are you?
We're good.
We're good.
Yeah.
We're here in Tennessee right now, and just keeping at it, I guess.
Yeah. Well, and there was some exciting news. Somebody might have left high school recently.
That's right. We
That
had a
is right.
graduation. To close that chapter, she feels good. She's going to play soccer in college, and so she actually starts working out. She's already started working out, but she starts working out with the team next week, which is good, or at least the girls, let's say.
Wow.
So she's excited.
Yeah. We're excited for her.
Soccer season, in Arizona, soccer season's in the winter time, but in college it's in the fall. So there's not much of an off season this year. So quite the adjustment. So she got to start right away, which is good. Helps get her settled.
Yeah.
So,
Yeah, that's a lot. That's a huge transition to happen so quick. It's like the second she graduates now to know that she's already into soccer is, a lot.
It gets her over high school real fast and right into college mindset. So, which is a good thing.
I didn't
It's
have
a good
that
thing.
because like in baseball's in the spring. So when I was in high school, baseball stopped, and a week later, because we won the whole thing. So we played the maximum amount of games. So we played deep, and we graduated a week after we played our last game. And then we had to wait and wait and wait. And since we had that time off, and then we didn't get a time to digest high school, it still was high school for until the fall, really. But her, it's the opposite. It's like, bam, college, let's go. We're starting.
Bam.
So she's doing good. Yeah.
Well, now you guys are officially empty nesters. So how does that feel?
Well, they're still living at home.
Half empty nesters.
So we're half empty nesters. But it's good. It's just a different overall mindset. It's a little more clear. It's just different, having two adult children.
Yeah.
So it's good though. We enjoy it. They're a lot of fun.
Already kind of doing their own thing, which is good, as adult kids. And so they rely on us a lot less, except for financially, of course. But that's with every family. But no, they're out and about doing their own thing. Really proud of them. They're in a good spot. So doing well. Yeah.
It's definitely a small progression for you guys too, which is a good thing. It wasn't a shock of, okay, now you guys are out,
Yeah, see you later.
Yeah, see you later. Now we're officially empty nesters.
Which is good for this dad. This dad needed
the gradual change.
Yeah.
Yeah.
But it's graduation was great. Seeing all the friends is great. My experience from coaching, every year you go through it. If you work in education, you still go through it. It's a chapter every year you relive when you're a coach. This group graduates and then you begin again. But it's always refreshing. It's sad, but it's refreshing to move on to the next chapter. So
yeah. All right, so let's dive into today.
Welcome to More Wealth Retirement Talk, where finance meets fun.
join financial expert Shawna Moore,
sports analogy pro and dad joke king Dave Moore,
and Jacqueline Gladhill, who keeps us all on track
as we break down retirement planning with insights,
laughs,
and a whole lot of more wisdom.
Well, today we're discussing a topic that impacts almost every family at some point, but one that many people avoid talking about, and that's life insurance.
And while that may not sound like the most exciting topic at first, this conversation is really about protecting the people that you love. You know, it's creating options for your family and in some cases, even improving your retirement strategy.
Yeah, and we're also going to talk about some things that people may not know about life insurance because it's not always just about a death benefit anymore.
That's right. There can be tax advantages, retirement income strategies, long-term care benefits, and other planning opportunities depending on someone's situation.
And honestly, this topic it's been weighing on my heart recently because I had a very close friend of mine that passed away unexpectedly at a very young age this month. And, it was just one of those reminders that life can change in an instant and none of us know what tomorrow brings. So while we can't control that, we can make sure that the people we love are protected if something happens to us.
Yeah. My condolences for you, Shawna. But I think everyone listening probably knows someone who's gone through something similar.
For sure. And unfortunately, that's true. And that's why today's conversation is so important. So let's dive in.
Well, it was going great until I realized Dave probably has a dad joke ready for us. We missed one.
Oh, we need one.
We do need one. Let's lighten it up. All right. You ready?
Yep.
As right as we're going to be.
Okay. Why did the scarecrow become a financial advisor?
Oh, no. Here we go.
Yep. Let's hear it.
Because he was outstanding in his field.
Wow.
Every time, Dave. Every time.
Yeah. I might have more later. Stay tuned.
And Jacqueline, the amazing thing is, and to our listeners, he tells these jokes like it's the first time that any of us have heard them.
Mm-hmm.
Wow. Hey, confidence is important in this business. You know what? And besides that, there's probably, if there's one listener that hasn't heard it, maybe I made their day.
True.
Well, Dave, apparently it's also a complete lack of shame.
Total. When you become a dad, there is no shame.
Well, before he finds another dad joke, let's officially get started.
Today, we're talking about life insurance and why it may be one of the most misunderstood financial tools available.
Yeah, and I think most people hear life insurance and immediately think, I have coverage through work, so I'm probably good.
We hear that all the time, and that's actually one of the biggest misconceptions that we do see because life insurance isn't really about you. It's about the people who depend on you. And one of the questions that, we often ask people is, if something happened to you tomorrow, would your family have more financial stress or less financial stress? So just take a moment and think about that. Would the mortgage still get paid? Would your retirement plan stay on track? Would college funding still happen? Would your spouse have choices or would they be immediately forced into making some financial decisions? And that's really where this conversation begins.
Yeah, Shawna, I think that's such a different way of looking at it.
Absolutely. And again, life insurance isn't really about dying. It's about loving, loving, your loved ones, your family, your spouse, your children. It's about caring enough to plan ahead for them. It's saying, if I'm not here, I still want to take care of the people who matter the most to me. Because when someone passes away unexpectedly, families are already dealing with grief. And so the last thing that they should have to worry about is whether they can, keep the house, pay the bills, or maintain the life that you've all worked so hard to build.
Mm-hmm.
And unfortunately, that's exactly what happens when there's no plan. I've seen families forced to make decisions they never wanted to make because there simply weren't enough financial resources available.
Absolutely. And, here's something that people often don't think about. Most people, almost all people insure their home. They insure their car. They even insure their cell phones. But their largest asset, their income is, that's often their largest asset is the ability to earn an income. So just take, for example, if someone's earning, $200,000 or $250,000 per year, or even it's $100,000 for the next 20 years, that could be potentially $3, $4, $5 million of future earnings. Yet many people spend more time comparing their auto insurance rates than protecting the income that supports everything else for their families.
That's a great point, and that's really sad to even think about. But what are some of the biggest mistakes that you see?
Well, the first is assuming that your employer coverage is enough. Many people have 1 or maybe 2 times their salary through work and they think, I'm good, I'm covered. But if you have a spouse, if you have children, if you have any debt, a mortgage, college expenses, even retirement goals, that may not go very far. And another mistake is buying your coverage 20 years ago and never reviewing it because let's be honest, life changes, your income changes, your assets change, your needs change. Yet many people never revisit their policies.
And another thing people don't always realize is that the employer coverage usually stays with the employer. If you retire, change jobs, get laid off, or your company changes benefits, that coverage may not be there anymore. So one of the conversations we often have is whether someone's protection is portable and whether it still fits their long-term goals. I think people are sometimes surprised when they realize how much of their planning is tied to an employer benefit they actually don't control.
And don't forget about beneficiaries here. You'd be amazed how many people have former spouses, deceased relatives, or outdated beneficiaries listed on policies. Could you imagine if you had an X on there?
Absolutely. And we have heard horror stories where that has happened. So it's something that people should check and make sure that your beneficiaries are up to date. Another mistake that people often make is waiting. People tell themselves, hey, I'll look at it later. I'm busy right now. And the problem is that life insurance generally gets more expensive as you age, and your health can change unexpectedly, which can affect whether you are even eligible for benefits. And so the best time to explore your options is usually before you think that you need them.
And one thing I've noticed over the years is that people tend to underestimate how much income actually needs to be replaced. They'll say something like, well, the house is mostly paid off, or the kids are almost grown. But when we start looking at the numbers, we find that there are still a lot of financial obligations. There's retirement savings that may stop. There may be healthcare costs. There may be debt. There may be a surviving spouse who now has to manage everything on one income instead of two. Sometimes the biggest value of life insurance isn't replacing every dollar. It's giving the surviving family members time to make decisions without feeling pressured financially. That peace of mind can be incredibly valuable.
Absolutely. Good points, Dave. Another question that we ask clients when we're talking with them is, if something happened to you tonight, how many months could your family maintain their current lifestyle? Is it 6 months? Maybe a year? Could they make it 5 years? Other questions, would your spouse still be able to retire when planned? Would your kids still be able to go to college? If you own a business, would your business continue operating without you, without life insurance? And to be honest, most people don't know the answer. And when they don't know the answer, that's usually where the planning needs to begin.
So if you're listening and you're not sure whether your current coverage is adequate, that's exactly why we offer complimentary discovery meetings.
We'll sit down with you, just review what you have, discuss your goals, and help determine whether any gaps exist. There's no pressure, no obligation, just clarity. You can give us a call at 833-4-MY-WEALTH, or visit more, that's 2 O's and more, wealthtalk.com, and schedule your visit.
Well, thank you, Shawna and Dave. Now, let's talk about something that surprises people most. Life insurance can sometimes help during retirement, too.
Absolutely. And this is where things get interesting. So there's certain permanent life insurance policies that can accumulate cash value over time. And when they're structured properly, that cash value may potentially be accessed through policy loans and withdrawals during retirement. In many cases, those distributions can be received income tax free. Now, this isn't a magic solution and it's not right for everyone. But for some individuals, it can create another source of retirement income that isn't directly tied to market performance or taxable distributions.
And what I like about that concept is the flexibility it gives you. Retirement planning works best when people have options. Maybe you're taking income from an IRA one year. Maybe you're using a brokerage account. Maybe Social Security has started. Having another potential source of income available can create more flexibility when you're trying to manage taxes, market conditions, or unexpected expenses. And flexibility is often what gives retirees confidence, which can especially be valuable when taxes become a concern.
Exactly, Dave. And as some listeners know, I recently earned my tax planning certified professional designation. And exactly. And that came from just, doing retirement planning, and it does apply to our discussion today, but it's really about making sure that I can provide the best advice for our clients as far as tax planning is concerned. One thing we focus heavily on is helping clients understand that retirement planning isn't just about accumulation anymore. It's really about distribution. So it's about keeping more of what you've worked so hard to save, and reducing taxes as part of that strategy. Many retirees discover, unfortunately, that taxes become one of their largest expenses. And so for some families, properly structured life insurance can be part of an overall tax diversification strategy. Again, not for everyone, but for the right person, it can be an incredibly valuable planning tool.
Shawna, I love that you emphasize that. Not everything is right for everybody, and it's really dependent on your personal plan.
Absolutely. Real planning isn't about finding a product. It's about finding the right solution for a specific situation.
Well, let's talk about long-term care here, because that's another major concern that people have.
Yeah, and for good reason, because many families have experienced firsthand how expensive long-term care can actually be. And so one of the newer developments in the industry is life insurance policies that may allow access to a portion of the death benefit while you're living if you need qualifying long-term care services. So instead of having to choose between life insurance or long-term care coverage, some policies can potentially address both concerns. If care is needed, benefits may be available. If care is never needed, beneficiaries may still receive a death benefit. And so that flexibility is attractive to many families.
I've had conversations with people who watched a parent or family member spend hundreds of thousands of dollars on care. Those experiences tend to change how people think about planning. It's not just protecting assets, it's about preserving independence and having choices. When families understand that, the conversation becomes much more meaningful.
Mm-hmm. Right, Dave. Well, let's switch here and talk about maybe some high net worth strategies. And so for the higher net worth families, the conversation can look a little different too.
Right. Absolutely. For more affluent families, life insurance isn't always about income replacement. Sometimes it can be about creating liquidity. Sometimes it's about estate planning. Sometimes it's about wealth transfer strategies, or sometimes it's also just about helping your heirs receive assets more tax efficiently. The wealthiest families in America have used life insurance strategically for generations. And so the question isn't whether wealthy families use it. The question is whether it makes sense in your specific situation.
One thing successful families often understand is that wealth transfer doesn't happen automatically. Just because someone has accumulated significant assets doesn't mean that those assets will transfer efficiently. And that's why planning matters. The goal isn't simply building wealth. The goal is making sure that wealth ultimately benefits the people and causes you care about most.
Now, let me ask the listeners a few questions, just kind of food for thought. If something happened to you tomorrow, would your family have financial choices or financial stress? Would your spouse have options? Would your children or grandchildren be protected? Would your retirement plan survive without you, without you being here to continue making contributions? And if there were strategies available that could potentially help protect your family, improve tax efficiency, and create additional flexibility in retirement, would it be worth spending maybe 30 minutes exploring them? Those are the conversations that we help people have every single day.
So if you're within 10 years of retirement and you've accumulated significant assets, or you simply haven't reviewed your life insurance in years, now is a great time to take another look.
Yep. You can give us a call. Our toll-free number is 833-4-MY-WEALTH. That's 833-469-9325. Or visit more, that's MOORE, wealthtalk.com, and schedule a complimentary consultation. It will help you determine whether your current strategy is still in alignment with your goals.
All right. Well, before we wrap up, I feel like we have to get some more dad jokes in there because I know that this topic is maybe a little bit morbid. So let's just lighten the mood a bit.
Perfect. You ready? Got one?
Well, it's not just human beings that are relocating to Tennessee in record numbers, right? It's also the cows. Cows are coming here in record numbers, but they're coming because they love country music.
Now, I will give you, that's probably one of your better ones.
They're moving to Tennessee.
Okay. That's good. That's too much thought, maybe. A little bit too much thought there, Dave.
No, that's great. I think that lifted the mood perfectly. I give him a star.
The mood, did it lift the mood?
Oh.
Yep.
Wow.
And by the way,
I walked right into that one.
2 O's and more and 2 O's and moo.
So you're calling yourselves cows now?
Pretty much the way we've been eating. Pretty much.
You don't have to tell our listeners that. Well, again, in closing, we appreciate you being here today. Life insurance isn't really about death. It's about protecting the people that you love. It's about creating choices. It's about reducing uncertainty. And for some families, it's about adding another layer to a comprehensive retirement, tax, and legacy plan.
And if there's one thing I'd encourage listeners to do after today's show, it's this. Do not assume. Don't assume your work coverage is enough. Don't assume your beneficiaries are up to date. Don't assume you'll have time to deal with it later. Take a look at what you have. Understand what it does. Understand what it doesn't do. Because good planning isn't about preparing for the most likely outcome. It's about being prepared for the outcomes that would have the greatest impact on the people you love. So thank you for spending part of your day with us.
Yes. And just remember, I wish that we all had a crystal ball, but sadly we don't. And if you found value in today's conversation, share this episode with a friend, a family member, coworker, or anyone who might benefit from hearing it.
And don't forget to follow More Wealth Retirement Talk on YouTube, Facebook, Instagram, LinkedIn, Spotify, wherever you get your podcasts. If today's conversation made you think about someone you care about, send them this episode. It could be one of the most important financial conversations they have this year. Until next time, remember, retirement planning is about more than investments. It's about creating confidence, protecting what matters most, and building the future that you deserve. We'll see you next time on More Wealth Retirement Talk.
See you later, y'all.
Bye.
Thanks for tuning in to More Wealth Retirement Talk with Shawna,
Dave,
And Jacqueline.
We hope you enjoyed the mix of financial insight,
sports wisdom,
and a few dad jokes along the way.
Join us next week for more ways to plan smart,
laugh often,
and retire with confidence.
Advisory services are offered through More Wealth Partners, LLC, an investment advisory in the state of Tennessee. Insurance products and services are offered through More Wealth Management, LLC, an affiliated company.